Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's November 24th. This will be our chart lesson for the day, and we really had a little bit of an uptrend today. We spent, actually, we spent, I'd say we spent more than half the day in this really tight range, but the morning trading was really good. We started off in this range. There's a gap on the daily chart. We opened here and we closed way down here, and the actual high yesterday was down here. So I really, normally these gaps will get filled within a couple of hours after occurring. So I really thought with this range we'd probably break out and fail and go lower. But when we held on and started going higher, the first thing you want to do is look for a measured leg, which there's your measured move. And there's the low, so you start there. So that gives you a target of right in here, which we did find some resistance right there. It ends up really being support the rest of the day. And so we actually went a little higher, but notice you got a little overshoot. You come over here, you finally get a break, a new high, and then we just really went sideways from there. And we really started going sideways here from there. But we came back over this trend line, got the break, a new high, two legs down, and then back into the range, and that resistance continued to hold. So yeah, once it was obvious we were going higher, which was probably right in this move up, then you want to start looking for at least a measured move. And we got much more than that. Well, I shouldn't say much more, but we got, well, let's just see how much more we got. The measured move was around, just call it 27. We went to 35. So about an 8-point difference there. But that would have given you a great target if you could catch any of these longs here to that area as a minimum. But anyway, let's actually, before we get started on here, I'm going to back out where we can see it a little better. But I'm probably going to go ahead and leave tomorrow by noontime. So no chart lesson tomorrow. I will do the mid-morning chart. And unless it's pouring down rain here or something, or there probably will be no chart lesson. We're leaving town tomorrow evening, and so I need to leave here early regardless. But if it's pouring down rain or something and I'm stuck in, can't do anything but sit inside, I may go ahead and do a chart lesson before I leave, maybe even with what we got. But most likely, probably no chart lesson tomorrow. So if you don't get the email, then you'll know, hey, no chart lesson. So if you hadn't subscribed to the channel, if you want to, if you subscribe and you get and you click on that notification bell, you'll get a notification whenever the new video is up. You don't have to come looking for it or whatever. So for those of you, most of you are probably aware of that already, but if you're not, that's something to be aware of. And this actually should be a little bit lower right in here. Let's go ahead and start the chart lesson, talk about our trades, and we'll go from there. Well, we traded up into this, so the rules say the odds are if we get a successful breakout, it's probably going to go higher. And sure enough, even though I was thinking we might go lower today, we went higher. And so the good thing about it is if you follow the price action, you don't get thrown off. There's no real setups here to go short. There never was really a good lower high here that triggers. I thought we were going to get one here, doesn't trigger. And then we kept making higher highs each time and higher lows. So just sit and wait. And the only way you can go long is to get a good double test off of this. And we really don't. You might have looked at this as a double test and gone long here, but I don't like that signal bar, so I didn't mark it. And the odds are it's not going to go far. So I never saw anything that I liked to the long side, and we never really got anything going up until way over here. So we'll talk about that when we get there. So not a lot of trades today. It was kind of a quiet day, and it'll probably get quieter tomorrow, and then nothing. Of course, you don't even want to waste your time Thursday and Friday. So, but anyway, let me back out a little further. We'll go through these trades, and we will wrap it up. And we'll probably wrap up our week. So. When I came in, we're clearly in this trading range. 7 o'clock came just as we're going back to the highs here. And technically we made a lower high here, lower than that one. And it's a nice signal bar, a little ways away from the EMA. The problem is you still got this little channel working up, and that's the first close outside. And so we're probably going to get a retest. And sure enough, we try. We don't make one, but we try. But now you get a for sure lower high, and that's also a second entry short right here. So that's the better place to go short. But if you want to be a little aggressive, considering that's still a lower high, you may take that trade. Odds are I'll probably bounce at the EMA and try to go back and make a higher high, but it doesn't happen. We move on down, and you get a first entry and then a second entry. And this is right kind of in the middle of the range, but you got a clear trend line there, and it's actually a little bit higher than that. Just like that right there and there. And it does confirm it. It does break higher and fail and turn down and go through that bar all in one bar. So it's probably going to trap some people. I looked at this as a double top, so first entry, second entry, but it's also a second entry short. It also confirms the trend line. We're expecting prices to come back down to here. I marked it green because it's a little bit aggressive, but you may take the trade. There's reasons to like it. So, and then we came down here and failed out the low side. We actually traded out the low side and just kind of got stuck going sideways here. We do get a little failed break lower here. As always, the safer play is to wait on the higher low, but with this being a double, we failed out of here, and now we failed out of here, and we're way away from the EMA, so there's odds are very high we're coming back. Again, the better play is to wait on the higher low, which comes here, and it's just an inside bar. It does make matching lows, but it's right into the EMA. It's got a lot of stem on it. I'm not crazy about it. I think this is a safer play than right here. Even though this works out and would have been a great trade, I just don't think you can want to enter right here. And unfortunately, you don't get a reversal pattern on this thing. Just takes off. And it comes back here with a failed second entry short. But now you're right back into the highs. This looks congestive. That's just really, really risky. But you break out, you get a failed breakout, and you get a lower high here. The only reason I didn't mark this lower high, because we are a long way away from the EMA, and you probably could still mark it green. But the problem is, again, this trend line is clearly in play. And there's a chance we could bounce right there and go higher. So it probably should at least be green. I'll go ahead and change it to green. But it's risky because of it's not clear cut. It could easily bounce right there and go higher again. But you do get your break, and now you'd look for a couple of legs up. And I already talked about this area. You're just waiting for the lower high, and you never really get it. You get one right here, and this is a good example of why I didn't really like this one, because this is what could happen to you. It turns down and bounces and goes higher. So it's dangerous. Of course, there is a little difference in this one and this one. Notice here you're at the EMA or really below it, and over here you know prices are probably coming back to it. So even though they're similar setups, the context is really totally different here. And so we'd like to get a higher low. We don't get it. The failed second entry short's way up here at the midline. So far away from the EMA, it's just really dangerous entering there. I think you have to skip that one. And then you come back, you get a first entry, and you get a second entry, but your signal bar is no good. You get a higher low here. It's right into these highs. This is starting to look like a pretty good trend, and this midline's starting to look pretty good because we bounced there a few times here, and now we're back here at it again, and we couldn't get back to the trend line. So you might take this higher low. Again, it's a relatively risky trade. But when you get a real strong trend like this one, you don't get a lot of opportunities to enter. But if you're just patient, a few minutes later you get a second entry long off this key entry point. The signal bar it's close to being iffy, but the key to this one is it's only 6 ticks. That's about as low a risk as we've had lately. And there is 2 legs down. It's a failed second entry short too, so that really kind of throws the type of signal bar out. Notice that that's a new swing low, so first entry, second entry. and there's really a hidden second entry long there as well. So I like that trade, and that's why it's blue. If it was just a if it wasn't a failure, I'd probably made it green. But with that failure, I like entering there because you're going to trap people trying to pick highs, and you can tell there were people trapped because look how quick it shoots up, and then it just starts trending again. You actually come back to the trend line here, and by this point, it's pretty obvious this is a strong trend. The only reason I didn't mark this one is because it looks a little congestive there, but it's going to look that way on a trend like this. So you almost have to ignore that, but you might take this trade. This is another one you could argue for it to be green. If you want to be a little aggressive with this kind of trend, because the odds are we're probably going up to this high right here, and we haven't got there yet. We still got a ways to go. So we run on up, we come back, and you actually make a first entry, second entry right there, and you've got a triple test. Notice you made that low, you came back once, you came back twice, and this trend is right off the key entry point. It's pretty much, it's not quite back to the EMA, but this has been a strong trend, and this trend line's been very good to us so far. So I like entering there, even though it's aggressive. And it's another nice, and again, people are picking tops. Look how it shoots up real fast. That's because people were picking tops all the way up, and that's just a losing strategy. Once we start trending like this doesn't look like it. If you haven't heard me say this before, when you start to see trends like this, where there's the pullbacks are very shallow. See how shallow these pullbacks are? They're just and you get a lot of little dojis and stems on both sides, but the market just keeps going higher, or if it's coming down, it keeps going lower. Those are strong trends, and they don't look like it, and they'll fool a lot of people that'll pick tops over and over. But when you start to see these shallow, as you look, this is probably the biggest correction, this one and this one, since we broke out right here. So you just don't get any real deep corrections. You see a lot of these little doji looking bars and a lot of stems, and they just keep going higher and higher. That is a strong, strong trend. So pay attention to it. But we actually overshoot the main channel here, and then we turn down. So we're probably coming back to here. And that's exactly where we come back to. I did notice you make a new high here, and you get a first entry and then a second entry. This has been a strong trend, so another second entry long at the EMA with a very small bar. I mean, that's 4 ticks. That's very low risk on a second entry and a strong trend at a key entry point. There you got the EMA, you got the midline. It does close below the EMA, but the odds are you could probably get a scalp out of that, and you might get a lot more. So unfortunately, we didn't get much more in a scalp, but it was a quick, easy one. It is a little aggressive, so I marked it green. We do continue. It turns out we got a little spiking channel down back to the trend line. And notice what you get. You make a low. You try to go low, short once. You try to go short twice. And that's a failed second entry short. And the actual entry would be 1 tick above this bar. Because the failure occurred when prices broke above it, although this is the swing low, so your stop has to go below here. And I had a conversation with a gentleman today on email that he's still following the 8-tick rule, which it's starting to get to the point where you can on some bars, but during that high volatility, maybe since March, trying to follow the 8-tick rule is impossible. The most important thing you do is when you enter a trade like right here, your stop has to go 1 tick below the signal bar. And if you were going short one right here, and this was your signal bar, your stop has to go 1 tick above that, regardless of the 8-tick rule. That's more important than the 8-tick rule. So we really just had to kind of throw the 8-tick rule out, although it's starting to get to the point where we can almost trade it in a few instances again. So maybe the market's slowly going to get back to normal. But just make sure you understand that anytime you take a trade, if you can't get in with the 8-tick rule and you're wanting to follow that, then you just can't take a trade if you can't put your stop where it goes. So your stop has to go 1 tick above or below your signal bar depending on entry direction. Always, no matter what. That's most important, number one. It's 10 times more important than the 8 tick rule. And just for full disclosure, I don't follow the 8 tick rule at all. I hate to say that because a lot of newbies need that rule to keep them from blowing out their account because they're going to lose more. But once you can read the chart and you're a pretty good chart reader, you won't have to worry about the 8 tick rule. If you like the trade, take it just like you always do. Put your stop 1 ticker below the signal bar and let her go. Because I tried following some other adjustments and my winning percentage went down. So I just went back to the regular rule and everything went right back to normal. And that was during the high volatility when the bars were huge. My experience was because the bars were so big and the market moved so quickly, it was easier to get a 4 ticks was nothing during that period. I mean, you could get 4 ticks on noise without even being right about the trade. So my experience is when the volatility was high and the bars were larger, it made it easier to get your scalp. So I didn't worry about it, the 8 tick rule. And I probably will regret saying that because some of you will start losing like crazy and you'll say, you know, this 8 tick, I'm getting stopped out and I'm having huge losses. And well, that's just, you know, if you can't read the chart, you need to be using 8 ticks. I'll leave it at that. So anyway, we get a failed breakout here. We do make a new high too. There's a couple of legs up, right? A couple of swings up to a new high. So see your break, move to a new high. And this one is real tempting. This is the high of the day and so far away from the EMA. And this actually breaks higher and turns down. I didn't mark it green, but it's one that if you want to take an aggressive trade, this is where you might take it because these failed breakouts, and if you do take one of these, hold a runner. If you're right, hold that runner because you can see you would have got a runner on this and you could have easily got, I mean, when it broke lower there at 36, 37, you could have easily got out down in here that's 5 points. But if you're wanting to try to see if we're going to go the other side, then you know, you're all the way down to 28 and it's another 5 points. So, and you really could have got a little more than that out of it. So this is when and when you're in a range like this would be the only time I'd look for to hold a runner is on the failed breakouts. Inside here, just scalp out. You're better off. You might try to hold a runner off the lows if you're consistently going from side to side. But when it starts doing like this, just scalp out. And when it's like this, just scalp out. But anyway, we fail, we come back, we make a lower high here. And it's tempting to enter there, and you probably could. It's another one you could probably make green, but it's right into the EMA. So I say wait and see if you get a reversal. And of course, it pushes on through, pulls back, and you get the failed second entry long. It gives a double test of this, and if it breaks lower, that's where you really want to enter. And it actually comes back and gives you another opportunity right here. So if you didn't enter here, you could enter here. And either one of those were nice entries. And of course, it runs down here, and again, you get that failed breakout. I didn't mark it, but I've already told you the importance of those things if you get them right. So you may take one. It's always better to wait on a higher low here or a lower high here. And you do get a higher low right here, and it's still within this trend line, and it actually breaks lower and turns and goes out the other side, which that usually traps people, and your entry would be 1 tick above that. That would be the only way I would enter that. I don't think I would go long just 1 tick above that when it closed right in the EMA like that. But playing the reversal, it's going to trap some people. And you see how it rocketed up, but then it comes right back. So that would be the only way I would like that one is if you entered it as an engulfing bar 1 tick above this because it breaks lower and turns, and I would have just put a buy stop there. But once it closed right into that EMA, I'm going to wait. Comes back, it tests low, and it comes back again. And this is just barely after 2 o'clock. This is at the time it's like 2 minutes, so you might take that trade. because you get a double test, you're back inside the range, so you're probably going to go higher. So that's another one that you could probably argue for. And it's real close. I mean, you could argue for it to even be blue. I didn't mark it because it was after 2 o'clock, but there's reasons to like that trade. So anyway, that's what I saw today. And as much as I really thought, I don't know why I can't get these things straight. As much as I thought we were going lower today, didn't happen. So tomorrow we may come back and try to fill that gap tomorrow. Wouldn't be surprised if we don't, but wouldn't be surprised if we go higher either. So the key is, even if we get an idea of what we think prices are going to do based on on what the price action showing, but some of that is based on experience. And my experience tells me most times when prices are ranging like this and there's a gap, that the gap's going to get filled that day. But I was wrong. But as long as you follow the price action and it proves, and it'll show you if you're going to be right or wrong. You're always thinking where prices might be going to go, but when it's not doing that, you don't argue with it. And that's what most traders do. I get a lot of emails where people say, well, I was expecting to retest the high, and so I was looking for a long, and the whole time the market's trending straight down. And I'm like, well, don't argue with it. Just because you think it's going to do something, the rules say that's the likelihood, doesn't mean it'll happen. Nothing is 100% in trading. Nothing. And you have to follow the price action. You have to understand what it's telling you. And it's like learning to read Russian or Chinese or Portuguese or Spanish when you're not a native speaking, haven't learned that in school. So it's not easy. It's not easy at all. So you're basically learning a new language, learning to read this chart. So you can't buy a manual or watch a few videos and practice for 6 or 8 weeks and expect to be fluent in this language. It just doesn't happen. And anybody that tells you that they've got the holy grail, that they've got the special pattern, that they've got the special software, if somebody tells you that, turn around and run as fast as you can go, because it doesn't exist. I promise you, it does not exist. We've been trying to write an algorithm for 15 years. It can't outtrade our best traders. So I promise you, it doesn't work. There's too much experience. There's too much. Like I said, the chart speaks to you, and it changes quickly. And you just can't write. The rules are they're not strict enough to work to write any kind of program that's going to be consistent long term. Unless you got deep pockets. You hear about all this algorithm trading. Well, those guys have got deep pockets. They can afford to be wrong. They can afford to be wrong till they're right. You and I are retail traders. We don't have several $1 million in an account where we can afford $100,000 drawdown. They can, we can't. We can't hardly afford $1,000 drawdown unless you're trading big numbers. So most of the people watching this video can't afford $100 drawdown, most likely. Not right now, because you spent a lot of money on your software. You saved up your money for your account. You bought your internet. You bought your, no telling how many courses that you've tried to learn. And I didn't mean to get off on this tangent today, but I just want people to know you got to have realistic expectations. Most people fail at this because they have unrealistic expectations. They see these internet marketers that, hey, look at this pattern, watch it work, and they'll show you a trade that's working. But they don't show you how they got to there. And it's not the pattern. All the pattern does is narrow down your entry timing and your entry location. The price action, the context of the chart is what really sets up the trade. And you can trade that pattern all day long. If you don't understand the context, it's going to be wrong half the time or more. So make sure you understand what trading is really about and that you have realistic expectations. And if you think you can buy a pattern or you think you can buy some software, well, you're just wasting your money, I promise you. Because if you could, everybody would be buying it and getting rich. Trust me, think a little bit. If it sounds too good to be true, it is. This is not easy. Nothing I'm promising you here is easy. It's going to be all about hard work, time, and study, and busting your knuckles. Reading and studying charts for hours and hours, for weeks and weeks and months on end. That's what it takes to be successful at this. And if you think anything else, you're just fooling yourself. So I just want to make sure that people hear that, because I know a lot of people come in here and they come from other places where they hear these little promises and they see these little marketing gimmicks, and it all looks wonderful and it looks easy, and it's not. So anyway, I'm not trying to discourage anybody, because it can be done. Anybody can do this, but most people aren't willing. Most people have unrealistic expectations, and they're not willing to put in the real time it takes. It's just like trying to go to law school or medical school. You're in for the long haul. It's going to be a while before you make money. And if you're not ready for that, then this is not for you. So if you're out unemployed because of COVID and you're trying to find an easy way to make some extra income, this probably is not it. You're probably just going to lose what little bit money you got. Now, if you want to take this time to start learning and practicing and working on it, that's great. But if you're needing to feed your family or feed your kids, I don't want to see you mess that up. So make sure you understand what you're doing. But I'm going to wrap this up. I hope everybody has a great Thanksgiving. I'll be back Monday. I think it's the 30th, I believe, is the date. So until then, I hope everybody's safe, has a great holiday, great and blessed holiday, and get some rest. If you're new and you want to put in your time, study time, this will be a great time to do it. And otherwise, I'll see you next Monday. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.